I think the answer is nobody knows for sure just yet. I mean, the deliveries we just got today show that the problem is not getting any worse, but it's a long way to go before it gets better. And even though we're all looking at Boeing, holding a production rate flat on their cash cow, the 737 program, embedded in that flat rate is a near doubling of the new 737 MAX variant, which is the model that has the new engines on it. So, those are the areas where some of the challenges have been seen on the engine front with castings and forgings. And so, even holding flat has embedded within it, some challenges ahead that they need to execute on. And so, Boeing was, with investors last week, hosted a whole bunch of folks out in Seattle. They say they're holding to plans, but what we have to remember is those plans are predicated on thousands and thousands of jobs being done throughout the Boeing factory every day and on down through the supply chain.
At the risk of geeking out, how does this happen? How do you get 4 weeks behind on engine deliveries in this day and age? What happened?
Well, what happens is these factories are amazingly finely tuned to do specific jobs, on an hour-by-hour basis. So you expect a fuselage to be at position 1 in the factory at the start of the workday, and that plane is going to make its way through the factory on a moving line. If that fuselage isn't there, and there are lots of reasons it might not be there, but if that fuselage isn't there because there's a quality problem on the back end or there's a part missing, that line is going to move, and there are thousands of people looking to crank these things off the line. There are 3 lines producing 737s. 2 of them will produce 1 per day, and one will produce every other day. So, you've got a production rate that's very, very high. It's not tolerant to have any slippage at the front end because it's just so finely tuned.
Right. So, bottom line, should I buy the stock, not buy the stock?
Yeah, look, at the end of the day, this is most likely a temporary phenomenon. The risk that you're looking at here is a temporary stoppage of the line, which I think is an extremely low probability. I think a secondary risk is a delayed ramp up in the next step up in the 737 production rate mid next year, which is to 57 planes a month. But if you take a step back and say, how do I put this all into context? I mean, the thesis still is very much intact here. The demand for these airplanes is very, very high. And as Boeing comes through this situation, they're going to continue to ramp up production. We've talked on this program numerous times about the expectation that margins can go materially higher from where they are here. That's going to generate a lot of cash, enable a lot of deployment, and the shares are now much cheaper on those out-year numbers, which you expect they'll recover to. So I think this will be a temporary glitch that we'll look back on and say, you know what, that was a chance to buy this stock.